thought they did a pretty good job. What'd you think?
Excellent.
It was awesome. So look, Bruce, it's been about 20 years since we launched our asset management business. Back then, we had a balance sheet. We were investing in companies. We owned some great businesses. We were a very good investor, owner, operator back then, and we were already pretty successful. So it was not an obvious decision to become an asset manager. And it pains me to say this, but I remember when you wrote the business plan, you sent it out to a bunch of us, and I was among a couple of us who said, Bruce, this is crazy. Like, why would we do all this work and let everyone else enjoy the profits of it? So you were right, I was wrong. That's why we have this amazing business today. But I think people would really like to hear why we chose to start raising money from institutions, investing our capital beside them.
Yeah, maybe in hindsight it was crazy at the time. But look, I think it goes back, firstly, and you all know this, but I'm going to say it, is change is always really uncomfortable. But being uncomfortable is what makes great businesses and which makes life exciting. And what most companies do is they just sit around, they have a great business, and they just keep doing exactly what they're doing. Yeah. And often people then do dumb things, and they maybe change and make big mistakes. But if you can incrementally change over time, it's tremendously valuable to evolve the business, because if you don't, you end up like Kodak or many businesses that have happened in time. But if you go, I'd say if you reflect back at that time, Cyrus, probably the most important thing that we have always adhered to is if you're in the types of businesses that we're in, you need scale amounts of money. And I probably the number one thing, the reason was that it wasn't that we were going to really create the asset management business that has been created. It was that we needed access to do the things we wanted to do and to execute the business plan of internationalizing the business, going to other countries and building out, that you needed to have access to capital. And it was the glimmer of hope at that time was that we could access international pools of money on a private basis and deploy it into these types of assets. And of course, 25 years later, it's a highly the business is highly institutionalized. Then there was no business, and as you remember, Cyrus, we actually had to make it up. Like literally made it up as we went along. And I look at our team now, they're highly professional and do an incredible job. We were making it up. I'm embarrassed. We probably have our presentations from 25 years ago, and they're embarrassing compared to what gets done today. And I would just, the last thing I'd say, Cy, is I think the two things that the team talked about earlier, which is what's happening with retail wealth today and what we'll talk about this afternoon, the insurance sector and what we're doing in insurance, are two similar junctures of what's going on with our business that are almost exactly the same as what happened 25 years ago. Because the retirement markets and retail wealth, we're at the early innings of that change, and that's going to be like the institutional markets over the last 25 years. And the insurance business for us is going to be incredibly changing to the company. So I think both of those things are really exciting.
Well, you use the term, we've institutionalized our processes and our business, and I agree 100%. And one of the themes that I heard today from everyone who spoke is, we have deep operating expertise, operational capability, and that's something that as I said earlier, I think we had that 25 years ago. So we learned a lot being an owner-operator. And how do you think that's helped us manage money for institutions and clients?
Yeah, look, you were deep in the businesses for decades. What do you think?
Well, it's like you said. I'd say early on we probably didn't know as much, and over time, through trial and error and very good advice from our predecessors, we learned the basics and we codified them. We created processes to make sure people followed the right process when we bought a business, what to do with the business, how to choose a great management team, how to choose the right strategy, et cetera, et cetera, et cetera, and how to focus on the right KPIs. These are things, at least when I started, we didn't really.
Yeah, and I would also say that it's foundational. Some of the things we got right, maybe as opposed to you could have gone a different way. We didn't change for the marketing purposes.
Yeah.
When we started, and you will remember, and some others here in the room that work with us over that period would remember, our marketing people told us the only way to sell funds is to do this.
Oh yeah.
And we said, well, we're not doing it that way. We invest, and we're going to invest, and if people want to come to us, with us, they will invest with us. And I think that was probably one of the more foundational things we decided to do, which was we're in the, and this is subtle, but we're in the business of investing, and we invest our money, and we bring along others that want to invest with us in our strategies. That's very different than some money can get raised, and we're going to try to put it to work. And it's behind the scenes, but it's subtle, but it's extremely important, because what it means is that we believe in everything that we invest into. We put our money, both our money, our other shareholders' money, and our clients' money into the exact same things. And that probably was that's what. I think that's the reason for a 25-year track record that is really good, and that people can invest with us, which gives us the basis to do all the things for the future.
Yeah.
And it was really led to, we actually run these businesses and we own them, and it's not, sometimes you get lost in the numbers, but these are just companies with people, and you're just trying to provide essential services to people around the world. It's not that hard. But it's foundational to make sure that you don't take stupid risks and do dumb things in the company.
We have better marketing people today than back then. Look, we had the opportunity to work with, say, the prior generation of leaders at Brookfield. And what key lessons do you think they passed down that are still relevant to us today?
Look, I think all of the things, in fact, led by Jack Cockwell, who is still on our board, and he's in his 80s and not actively involved, but is, I'd say, set many of the things that I think he'd be okay hearing me. Hopefully he's not listening. If he doesn't like it.
He's listening.
Hi,
Jack.
I would say, I would say that I think he set many of these principles. I think we refined them, tailored them, built them, institutionalized them, and made them better. And they were make sure that everyone, all of our people, the companies we buy, are incented properly, that we're incented properly, and that everyone is an owner of the business. Number two, that we only buy things that we can understand, that we can build and we can grow and we can be responsible for, and we can be proud of owning. And number three, foundationally have more capital than anybody else and build businesses off of that, and never, ever get yourself in a situation where you don't have capital when things are going down. Because that's when, you know this, Cyrus, better than anyone. You've been the most, you bought the best businesses at the worst times. in the markets, but we had to have the capital to be able to do it. And that having capital and never putting yourself in a situation where you're not on the offensive, not defensive in tough times is really, really valuable. I'd say those three things are probably the most important.
And look, we are super fortunate. We have a lot of people here who have been here for a very long time, and I think that's helped maintain our culture immensely over many years. So how would you describe our culture, Bruce, to other people?
It's unusual. Like it's not an easily explainable thing, but I guess I'm proud that firstly, as you get bigger and bigger, it's tougher. It's usually tougher and tougher, and it probably is. There's no doubt, because we had 10 people before, and now we have 2,500 or 3,000 in our investment manager, and it's just tough to keep that. But I spend a lot of time in all the offices around the world, and it's amazing. The people they're not the same, but they're similar. And so I think that's really important. But underlying it, essentially, we have a team approach. The team matters more than any individual. You will be successful and be rewarded if you're part of a team.
Yeah.
You're in some way, shape, or form, depending on where you are in the company, whether you're an operating person, executive, individual, you're an entrepreneur. You're an investor in the business. We are all investors. That's it. But we're all entrepreneurs, and we're just here because we have our money invested, and we feel like it's ours. It's not ours. It's not our company. It's the shareholders' company, but we're all shareholders, and we all feel like it's ours. And
think and act like an owner, right?
Yeah. And I'd say that pervades the people within our business, and we try to encourage. And many of you have heard me say this before, we try to encourage making incremental, evolutionary changes in the business, because that is, if you don't change, you go backwards. But what that means is that you're always making mistakes. And it's not that we like making mistakes, but you have to accept within the culture some mistakes and not have ramifications of it, or everyone, if not, people are petrified to change and petrified to do something new. And, but never make big mistakes. Like, don't bet the farm on anything. You know that better than anyone. We've always tried to keep the downside protected. But you have to push the edges, or nothing changes. You know, we have, and to use the example, Scanner was up here. We have the most incredible franchise on the planet for infrastructure. There's nothing that comes close to it. We could just sit aside, run our fund, and do nothing else. And we keep pushing the edges because I believe we're in the midst of this AI revolution that is going to happen. It's going to change every single business in the world. It's incredible what's going to happen. And we need to be at the forefront of it. And if we're not, we'll be behind. 5 years from now, we'll look back and we'll be behind.
Yeah.
So it's really, really important. And I'd say those are the things in the culture.
Look, you talked about when we started, we had 10, 20 people, whatever it was. I remember the entire investment team could fit in a boardroom at one point in time. And today we have 2,500, 3,000 investment people. Connor talked about the scaling up we plan for the future. So my question for you is, do you think there was a seminal moment or a couple of seminal moments or events that really accelerated our trajectory?
Yeah, look, I think during good times, everyone excels. During tougher times, Mr. Buffett always said it, you see when the tide goes out, you see who's wearing no underwear, or whatever the statement is. I think during the tough times over the last 30 years is when we've been able to at a minimum, continue to grow, to continue the business that we have.
Yeah.
But in particular, in 2008, we came out of 2008-9 on a very strong basis, and were able to propel the business when everyone they weren't even in business anymore.
Yeah.
Some went out of business, a lot went out of business, but the others were not able to grow fast. I think we came out of COVID. We all went back to the office in COVID. It was the best thing we ever did. 3 weeks after COVID hit, we went back to the office. And it was the best thing we ever did because we were working every day 3 weeks after COVID started. Firstly, it was more fun being at the office than sitting at home. But I think we've done 5 things since then that will be game-changing for the business 5 years from now, and a number of them happened during that period of time. Like our insurance business is, Sachin's going to show you later, it's going to earn $2.5 billion next year. It was 0 and started in COVID. So I think those tougher periods of time they're the ones that make the difference in a business, because you either go backwards or you can make great advances forward.
And culture matters in those periods of time too. Bruce, you started at Brookfield in our real estate business. You ran our real estate business for a long period of time. You've seen many cycles, many events in real estate. Where do you think we are today in the cycle, and what are the opportunities that you see in real estate?
So before I answer that question, I was listening to some of the presentations earlier, and I think probably one of the most important things of what's going on with artificial intelligence is that we started as real estate investors. What's being built out for artificial intelligence is the backbone of the global economy, and really it's just a giant real estate business. And because what we're doing is we're providing enormous infrastructure, backbone infrastructure to technology companies, and the build out is unprecedented. And the fact that we have power, real estate power and data center expertise allows us to build those things out. But it's really all of those things are backed off of what we learned out of real estate. And I think that's really, really important when you just think about what we're embarking on in AI factories, because this is just real estate. It sounds more complicated than that, but it is just real estate. If I go to the cycles, look, everyone knows this, I'm going to state it. Real estate is a highly cyclical business. It always has been, it always will be, because it consumes large sums of money, and you lever it to get returns, but over time you can make a lot of money if you buy great assets and if you are in the right places, if the most fundamental things. And I would say first point number one, fundamentals of real estate globally in most things are really strong. Yes, there's always some extreme stuff that's out there that's not so positive. This cycle, and each one's different. Each cycle has been different for 30 years. This time, fundamentals are good. The issue has been in the capital structures, and interest rates went up fast and they're not high, but they're much higher than they were. And therefore, people had to adjust their capital structures to it. And those things are sorting out in the marketplace. But as Brian said earlier, and as Connor said in his presentation, the real estate fundamentals have turned dramatically in the last 12 months. Transaction activity's come back. Doesn't mean everything's there, but you can now finance virtually everything in real estate across the world, and real estate lives on financing, and it's just turning in 100 basis points coming off of interest rates in the next 12, 18 months in the United States. Most other markets have already turned much greater, but in the US, it's really just waiting for interest rates, and you will see some of that come and drive the recovery even further in values.
And there aren't too many cranes.
There are no cranes. I'm going to look at somebody. Is there a real estate building, any major building under construction in New York City? In London, there's small buildings in the West End. There's nothing really under construction. In the city, what that means is next 5 years, rent's going through the roof. Retail, nothing under construction. Industrial, highly come down. It's about supply, demand, interest rates, and financing, and it's all coming back.
Okay, I want to switch gears a little and talk about capital markets. And I might get the numbers slightly wrong, but if you look over 25 years, 25 years ago there were 7,000 public companies in the United States. Today the number is something like 4,500.
Yeah.
In the private markets, 25 years ago, there were 2,000 companies owned in the private markets. Today, it's more than 10,000. So what's happened? What's going on here?
Look, you and I own Brookfield shares. We've never sold them. We just keep them. We own a business. Why would we sell? Or and that's with a private business, right? If you own a business, you own a store. We own, instead of at Brookfield, we're going to own a store. We own a store. We run the store. We don't look at the stock market price of our store every day. We don't care. We're not selling it. We operate our store.
Right.
The stock market just distracts people. And with the ETF market, active management in many places going down, ETFs taking over, it changes the value of stocks, and many of them don't trade properly. That presents enormous opportunity. I think we've probably taken 10 companies private in the last 12 months. That's going to continue to increase. We're going to keep taking more companies private. Once in a while, we'll take one public where it makes sense, but by and large, not. And I'd say when people say, oh, there's going to be more IPOs, there will be some IPOs, but more companies are just going to be sold to our institutional clients and to other sponsors. And people say, oh, that doesn't make sense because some sponsor is going to buy it from you. I'd argue the opposite. It makes total sense. Those are smart owners who want to buy a business and own it for the next 10 years.
Right.
Instead of taking it public. Why have it in the public market? So I think there'll be the global titans that are just too large to be private. You know, like Microsoft, $4 trillion business. Of course, that's not going to be private. And maybe that'll trade well because it's in the indexes and it's large. But by and large, the rest of it's all staying private. And remember, these institutional clients in particular, back when we were seeing them 25 years ago, they had a big one had 80 or $100 billion. But we're 25 years later. Those institutions have $500 billion, $700 billion, $900 billion, $1 trillion. And $1 trillion is going to end up at in 9 years at their returns, it doubles. When you have $2 trillion, $2 trillion goes to $4 trillion, $4 trillion goes to $8 trillion. These are staggering amounts of money that need to get put in places. And if you don't need liquidity, own a private business. There's no reason not to.
So what about, you talked about institutions, what about an individual investor? What does it mean for them?
I think people are going to end up with, that's why the United States is opening up 401ks. They're going to end up with 40% of their portfolio in privates, and 40% will be in ETFs and liquid stocks, because they should have some form of liquidity within every portfolio, and the rest of it's going to be in private. So whether some will be at, like some institutions, they are 50, 60% in private. I would advocate, always do advocate to anybody that ever asks me, have liquidity for whatever you might need, double it, because you might have a need that's in excess of what you think you need, and everything else should be in private. And that's what's going to happen. That's what's happened and happening in every institution in the world, and that is what's going to happen in retirement accounts. So I think Hadley, I think the number was 20 trillion of retirement wealth around the world. 3-5 10, 15 trillion of that is going to go into private assets. And it's going to be from real estate to infrastructure to companies owned in private hands, and they'll be better for it, much, much better for it.
Okay, we have time, one more question. What are you most excited about, Bruce, as you sit here today?
You know, Cyrus, I get excited about everything.
Everything with a Brookfield in front of it.
Yeah, what I'm most excited about, I actually watched our team up here earlier, and they're so much better than you and I were. Like they're smarter, better trained. They've seen everything. We can help them, but they're amazing. And so I'm excited about the future of what Brookfield has, because the people we have are incredible. And therefore, that's probably the most exciting thing that we have, which is just to watch that, the next generation of people come along.
So we're going to keep our shares.
You're definitely keeping your shares.
Yeah. Okay. Thank you.
Thank you, Cyrus.
Thank you. All right.